Hi, my name is Glenn Hasselman. I'm just making this video for the use of free accounting software to show you guys some things about processing leave in free accounting software. So I've already done a few videos and they focus on leave entitlements and processing leave using a BASOF hosted file. And BASOF hosted files have a feature where you can track the leave balance for each employee and put that on the payslip. That's a great feature, and BASOF is not real expensive. It starts at $100 per annum. So if you're interested in that, I'd encourage you to upgrade to BASOF. Now, but I do also want to show in this video how to handle leave when you've just got a locally stored file, and also some tips about leave accruals, which is important even if you are having the leave automatically calculated. Sorry, having the system automatically calculate it for you. So now I've set up this organization, and I just wanted to show you some things about the account setup. Okay, so I've set up this account, annual leave taken and annual leave loading already, but I'll just show you how they're set up. So this one's called annual leave taken. It's an expense account. The apply super is true because when someone takes annual leave they get super on top of that. Apply leave is true as well, although this has no real effect in the desktop version because it's not going to calculate the leave on the employee's or employee's entitlement to leave. Default tax code, I've just put gross taxable pay. So this is different in this setup to what I've described in the BASOF hosted files videos. In those videos, it will say there's a separate tax code set up for annual leave taken. If you follow those videos with a local file, that's fine. This will work, or either way will work. It's just more setup and unnecessary because that extra setup has to do with putting the quantity of leave entitlement on the payslip, which the local one's not going to do anyway. But yeah, you just want this to go into that gross taxable pay part in the STP lodgement. The payment deduction types is earnings because you want this account to be selectable in that earnings section of the payslip, and the normal rate multiplier is 1. So when someone takes annual leave, they get paid at 1 times their normal rate. I have seen people put 1.175 to sort of add the annual leave loading. That is not correct. You should just put a 1 there. And I'll show you why that's not correct with the setup of the annual leave loading account. So let's have a look at that. So annual leave loading is an expense, active is true, and apply super is false. So when an employee gets paid annual leave loading, they don't get super on that. Annual leave loading, I think, was a compensation for not being able to work overtime whilst you're on annual leave, and so that annual leave loading is considered a overtime payment rather than ordinary time earnings, and super only applies to ordinary time earnings. Apply leave is false, and default tax code is gross taxable pay. So this can just go into the normal gross taxable pay on the STP lodgement. Payment deduction type is earnings because we want it to appear in that section of the pay slip. Normal rate multiplier, I just leave it blank. Some people put 0.175 so that they can put in a quantity and have it calculate the annual leave loading. I actually just calculate the quantity, calculate the amount manually and put that in. I think that sort of just comes down to personal preference there. Okay, so with the desktop version of the software for annual leave loading, you don't really, or annual leave, you don't really need to set up separate tax codes. You might need to set up a separate account or separate tax codes for annual leave on termination if it's going into lump sum or something like that. So I've done some other videos on the termination payment, and have a look at them. Okay, let's have a look at a pay slip here. I've already set one up. So we've got the employee, and here I've put annual leave taken for the full week, and I've got a second line which is the annual leave loading, and that's just a figure I manually calculated, and the tax code, gross taxable pay, and you can see it sort of flows through to the STP lodgement there. And the thing is that you want to use, one of the reasons you want to use separate accounts rather than just using normal time or something like that to pay the employee is, well, one is so that the super calculates correctly, but there are others so that when you give the employee the pay slip, you can it's going to itemize nicely what they're being paid for, and they can see, yep, they're being paid for annual leave. They can actually see how many hours of annual leave that they're being paid for as well. So now, another important reason why you want to set up separate accounts for annual leave taken is so that when you look at your income and expenditure, you can see how much was leave. So let's say an employee terminates or resigns and you need to pay them out their leave. One piece of information you're going to need to know is how much leave they've taken. So on this income and expenditure report, you can actually filter it to the employee, and in fact we've only got one employee here, so it doesn't change, but you can filter it to the employee. You can actually click into the detail to review the detail and confirm that you can confirm the quantity of leave they've taken. You also want to look for other leave and things. There might be things like leave without pay, parental leave and things like that, which affect the calculation of the leave entitlement. And that's important information to have to calculate their leave payout. You also want to keep in mind that this is just for the current year, so you do need your records for prior years back to when the employee started so that you can actually do that calculation. The next thing I want to do is talk about that particular calculation. And it's important whether or not you are using a BASF hosted file or a local file that you understand the calculation. Even if you are using a BASF hosted file and it calculates it for you, you do need to review that, even just as a sensibility check, just to make sure, because things can get processed incorrectly and or set up incorrectly, and then the balance could be wrong, and you need to check that it is correct before you make the payment. So over here, I've got a bit of a spreadsheet. I'd probably point out a couple of things. So here what I'd say is that at the end of each year, you probably want to do a bit of a spreadsheet to say for each employee, how much of each type of leave they've got, when they started working, and the hours entitlement and the dollars entitlement. For your own financial management, just to make sure that you've got those leave liabilities covered, or for your financial reports to record those leave liabilities, and you want to review that and check that it makes sense as well. So even if you've got a BASF hosted file, you should review it, make sure it makes sense, because you might have to do corrections and you don't want errors building up over time. Okay, if you do have a local file, or as I keep saying, a BASI file, you still need to check the leave calculation when you're terminating the employee. So here I've got a little bit of a quick calculation, and well, it's kind of complicated actually, but this is how I calculate the leave and confirm the leave entitlement. There is a calculator on the Fair Work website, leave calculator, and you can calculate the annual leave. In fact, I'll just start a new calculation there, and you can click I'm an employer looking for leave entitlements. You can step through the process and calculate the annual leave. I actually found it's producing a slightly different, very small difference actually, but a different result to what I'm calculating. And I actually think my calculation is more correct. So I will step you through that at first. So this is the example I've done. Let's say this employee started on the 1st of April 2018, and let's say the finish date is the 7th of August 2020, which is last Friday. So basically I looked at the number of years completed service, which is 2. Okay, and it's 20 days for each year. So straight away and the general strategy is you want to work out the total amount of leave accrued, or you work out the service period and the total amount of leave accrued over that service period, and then you deduct leave taken. Okay, so 2 years of completed service, and then I work out how many additional weeks or days, hours of pro rata service in that final year. So the anniversary date is the 1st of the 4th. Then the days over that extra part year period is the difference between those two dates, plus add 1 because we want to include the 1st of the 4th. Completed weeks 18.6. I've just typed that in, but basically it is 129 over 7, and that gives you 18.42. However, you have to consider the final part of the week, which is so the final number of days is 0.42 times 7, so that's rounding to 3 days. So that's 3 days ending on Friday. Okay, so that's if it's a normal Monday to Friday week and the hours are evenly spread across the week, because you have to consider actually the roster and where the ordinary hours are worked. But if it's a three days out of a 5-day working week, then that's 0.6 of a week. So that's where I've got the 18.6 completed weeks there. The number of weeks in a year is 52. Okay. In fact, if you just take 365 and divide by 7, you actually don't get an exact 52. However, I just use 52, and the reason for this is that with an employee who was paid weekly, they sort of would get the 52nd week's pay slip and probably expect that at that point it would hit the 20 days of annual leave entitlement. If you accrue based on 52.14 weeks, then you will not quite be at that 20 days. That could be confusing for the employee, and it's actually less than half an hour off pay. So on the balance of things, it's kind of not worth worrying about the extra less than half an hour of pay to create that confusion. Therefore, the idea being to just work to a 52 week year there. So the calculation here is 18.6 weeks divided by 52, which is pro rata that much off a year. And so the total service period in years is this figure. It's 20 days per year. Multiply that out to get the total accrued days. 7.6 hours per day to get the total accrued hours. Okay, now and then you want to subtract leave taken to get the leave entitlement. So I've just plucked the number out of the air there, but you would have to go and check your records to see how much leave taken. This is where you can use the software and actually having a separate account recording what leave they've taken is important. The other thing is that I haven't reduced the service period for parental leave or leave without pay. So those things need to be considered and reduced, and you need to reduce the service period if those things apply. Okay. Now, I'm going to just quickly run through the Fair Work calculation, and I think you probably just get to the point, or most people probably just use the Fair Work calculator. It produced a number which is, as we'll see, it's a little bit higher, but again, negligible. So let's have a look at that. So let's do that same calculation in this Fair Work calculator. And here there's some things that can benefit you by using this calculator. It says, there's other options like I want to select the award that applies. I mean, yeah, so some awards might not just be your straight 20 days of annual leave in the year, and that might be something that you pick up by using this calculator. Is your employee an apprentice? I'm just going to put no, and again, this is where the calculator might help you a bit by guiding you in the right direction. Trainee, no. I'm going full time. And is your employee a shift worker? Okay, no. So there are other considerations here that you're picking up by using the calculator. So we said they started on the 1st of the 4th, 2018, and the end date is the 7th of the 8th, 2020. I'm just putting 7.6 on each day. No one actually works 7.6 because it's not a really round number, but it's often like used as the for salaried employees as the sort of nominal number of hours they're working every day. But rostered or employees might be working 8 hours Monday to Thursday and 6 on the Friday, that kind of thing. Okay, so here they're asking for unpaid parental leave, including the Australian government's paid parental leave. So yes, that's where the leave without pay and unpaid parental leave can be taken into account to reduce the service period. And I've just left that at 0. If there's any other unpaid leave, just leaving that at 0. Okay, how much annual leave was taken during the period? I'm just going to leave that at 0 because it's like, whatever they calculate, that's just straight off the balance, and so I'm really just interested to see, for this purpose of this exercise, what the total amount accrued is. So I'm just going to leave that at 0. Okay, and it has said it's 358 hours and 33 minutes. So let's compare that to what I calculated. I said 358.36. So 358 and 33 minutes in decimal format is equals 358 plus 33 over 60. Okay, so they're saying 358.55, which is a little bit higher. So why? Well, they've got a y link here, which is going to explain that calculation. And what they've done is they've worked out that there is 4,674 hours worked in that period. Minus, I guess this is a minus 0 and 0 for the unpaid parental leave or leave without pay. Okay, and then they're dividing it by this number, which is the rate of accrual. It's probably meaning accruing 1 hour per every 13.03 etc. hours worked, and then minus 0 hours of taken leave. And here we can see why there's actually two reasons for the difference. First of all, they've taken the total number of hours over that 2 and a bit year period. That is not correct, because the rule, which is in the National Employment Standards, says you're getting 20 days in the year, and the year doesn't always have the same number of hours. So the way I calculate it with this completed years of service is just per the rule. So you've completed a year, then you get the 20 days. And the number of hours worked in the year varies, because it depends whether the year starts on a Saturday or Sunday, and so how many weekend days are within that year. And if it's a leap year, whether, in fact, 2020 was a leap year, but the 29th of February was a Saturday, so, anyway, the number of hours in those years changes, but the rule just says it's 20 days for the year. So I think this is more correct. The other thing is, and I checked how they got this 13.035 number, and that is based on based on the 365 over 7, based on this number of weeks in the year. So whereas I just used the 52. In fact, interestingly, it was actually on the Fair Work website that I read that best practice was to use the 52 weeks to accrue the 20 days over 52 weeks rather than the 52.14 weeks, because it's a small amount of extra accrual, but can save some confusion for the employee. So, but in this calculation they're using the 52.14. So those are the two reasons for the difference in the calculation. Other thing I want to note is that when using a BASOF hosted file and using the default accrual rates in BASOF, they are based on the 52 weeks per year. So, for example, 20 days, 52 weeks. You accrue that much of a day per week, which times 7.6 hours per day is this number, and that's the number that's the number of hours annual leave that a BASOF hosted file will by default accrue per week based on a 38-hour week. So people often round this number to 2.9231, and you could see that quoted sort of in several places to just use that number. That number is based on a 52 week year, not a 52.14 week year. In BASOF you can override the leave accrual rate, so you could decide, hey, I don't want to use the 52 week year. I'm happy to explain if anyone asks that it's at the end of 52 weeks they haven't done a full year, and you could change that to 52.14 and then take this as the accrual rate. In fact, I'm not entirely sure how the accrual rate is entered in BASOF, whether it's entered like that or it's entered on a hour per hour. I think it's entered on an hour per hour type basis, so you probably want to enter this number here into the system. Anyway, if you are doing that, you should test that in your first pay run to just make sure it is accruing at the right rate. Okay, yeah, so that's, I think, some technical content, I guess, but the thing is, when you are calculating people's leave, you do need to try to get it right. Oh, there was one other thing I was going to point out, and that is that some of this, like working out the total service period, can be complicated, like working out that it's 18.6 weeks and that pro rata fraction. However, it's actually quite realistic to sort of do the calculation in this way, which is simply to set out the number of days or each day and what they've what hours they've worked per day, and then you can just, do the sum of those numbers to work out the total hours that they've worked over that period. So, if you sort of copy the section including the weekend days, and you can just paste, you can see how you can quickly get that those numbers to repeat, and you can just fill down the number of days and so on until you've set out the whole pro rata period, or even over the course of even to set up a calculation this over the course of 10 years is in a spreadsheet not too hard to do, although I generally just do it for that last pro rata period, as I mentioned, because I take the number of years of completed service. Okay, well, hopefully that's giving you some insight into the leave calculations, and helps you calculate the leave entitlements. Thanks for watching.